Hey there, thanks to anyone who's tuning in. This is the MetanetTV Livestream. We'll be starting in just a moment.
Good to go.
All right, we ready to roll?
Mm-hmm.
Okay, here we go. Okay, we're live on YouTube. Thanks to everyone who's tuned in, and I apologize for the mix-up with the time. It was supposed to be 1 o'clock UTC, but someone, namely me, completely forgot that there is daylight savings in the UK. There isn't where I am, so I overlooked it. Anyway, I just want to welcome to the show today Steve Shadders, who's the lead developer at nChain. Steve, how you doing?
Hi, I'm well, thank you.
Excellent. Now, before we start, I don't know how many people have actually tuned in and how many are going to tune in an hour's time. At least they'll still be able to watch it. Uh, I'll just explain what we're doing with this live stream. So this is the MetaNet TV live stream. It's quite I would call it a hard fork of the MetaNet TV live stream, but it's not a contentious hard fork. It's a continuation of the MetaNet TV live stream that was running on Streamanity for I think the past 4 or 5 months or so. However, Streamanity was not able to do any live shows at the moment, so we're going to run it through YouTube. And I'm going to just be doing the interview section with members of nChain every month so that you can still hear the latest developments. Maybe this way we can even reach a non-Bitcoin SV audience too. That wouldn't be a bad idea. So
Definitely, I've set myself the task this year of trying to reach out to people who aren't necessarily interested or invested in Bitcoin SV.
and how's that going?
It's very valuable, I think, to share with the Bitcoin SV community some of what's going on inside of nChain and explain things that are coming up and how we kind of work on things with the Bitcoin SV project. But we really need to be talking to people outside of Bitcoin SV so that we can explain what we're doing. There's so much messaging out there that is, FUD, and the only way for us to counter that is to talk to people. And in my experience, every time we have, we've gotten a very positive reaction. So we need to be doing more of that.
Right. What kind of outreach are you doing? Like who in particular you were talking to? Is it business groups or merchants, potential users?
Yeah, I mean, I spend a lot of time talking with businesses who aren't necessarily aligned with SV. What we have encountered quite a lot, though, is businesses that are really interested in the concept of blockchain. And they keep coming up against the question of, well, this is really interesting and exciting technology. I've got two big questions. How do I integrate my business with it? And what do we do when what we're working on becomes successful and needs scale? And so people who are sort of disinterested in the internal politics and factionalism of the crypto world seem to be turning to Bitcoin SV when they hear about it. And going, oh, at last, there's a blockchain that's actually taking this whole scaling thing seriously. One business that we encountered that works in the gaming space has been investing in building technology for blockchain, not specifically for Bitcoin, for 3 or 4 years, and their general idea is we'll build all of our stuff so that we're ready to go, and when a blockchain appears that they can actually handle the volumes we need, then we'll adjust our tools to work with that blockchain. So they were one of the very early people that approached us after Bitcoin SV was Reborn. shall we say.
Oh, that's good. That's very interesting to hear. And I have to ask, do you get any concerns or pushback from people out there? You know, people from totally outside the Bitcoin or crypto community.
Yeah, we do, but it's largely made up of the narratives I think that have just become popular and
Yeah.
generally unquestioned in crypto world. You know, what about decentralization? If you can't run it on a home node, then you can't have a decentralized system.
Mm-hmm.
You know, big blocks lead to minor centralization. That sort of thing. How will you store all of this data? And there's relatively easy answers to those questions. I mean, we've been storing masses of data for quite a long time. This is not a new problem. And when you frame Bitcoin as a system that's made up of a bunch of functional requirements that are problems that the IT industry solved 10, 20, 30, even 40 years ago, it's not too hard for people to get their heads around the fact that these problems aren't kind of mystical or unique to Bitcoin. They're just programming problems or IT system problems or distributed system problems.
Yeah. I think people often confuse the terms decentralized and distributed as well. Like when they imagine decentralized, they're thinking of something without any kind of hub at all, whereas that's more of a distributed system, as I see it, right?
Yeah, I mean, a hub doesn't need to be a single entity as well. I mean, there's value in the distributed side, but there is value in the decentralized side of Bitcoin, I think. But I think the definition of decentralized is where people get a bit skewed. I mean, in reality, if you've got three parties and none of them holds a majority, you are actually decentralized.
Yeah.
You've got 100 parties and they are cross jurisdictions. They have different motivations. They work in different sectors. They've got no particular reason to collude with each other other than compete. And you've got a pretty strong decentralization. Like Satoshi talked about nodes, and when he talks about nodes, he's talking about mining nodes maxing out at 100K. I don't know that we get that high. In my opinion, maybe a few thousand is feasible, but I'd be quite comfortable with that level of decentralization. The whole point of it is that one entity can't unilaterally make decisions. You don't need to have 5 billion nodes in a validating transactions.
Yeah.
To maintain the security of the Bitcoin network.
Yeah. Also, people seem to forget that Bitcoin BTC was mined in large, data centers full of ASICs even before the fork. Like it's not like people were still mining it in their bedrooms. I mean, some people do, but that's not really the majority of miners at all.
No, not at all. Let me just have a quick look at Coindance. Where is it? There. Blocks. I'm looking for the pie chart that shows all the different miners. Alright, so at a rough guess, just by eyeballing it, I'm looking at probably 12 different miners, which includes the other class, which is 5.5%. And that's a little bit higher than BSV, although not by much,
Right.
not by more than double. And that doesn't mean there's 12 miners in the world. There's 12 mining pools. I mean, factor in that they probably have additional nodes for redundancy, and so that they've got things spread across the world. But at minimum, this Bitcoin network here, or Bitcoin-like network rather, the BTC network, could be running with 12 full mining nodes. All of the other instances of Bitcoin D that are running, which I call listener nodes, because they're not writing the blockchain at all, are contributing nothing to the validation of transactions. Now, that doesn't mean there's only 10 or 15 miners out there. There's probably hundreds of thousands, but they consolidate under these mining pools, which are kind of the points of entry into the Bitcoin network. And that's quite okay, because these individual miners can switch from one pool to another in a heartbeat. There's some political issue, and one miner is voting for some change to consensus rules, and another one isn't. One mining pool is voting for one rule and another for a different rule. The miners can switch in a heartbeat. It doesn't take them long. And if no mining pool is offering the opportunity to vote in this different way, well, there's a business opportunity waiting to happen. I can get a mining pool fired up and running with probably a day's work. And if I saw a gap in the market like that, that's probably what I'd do. I'd grab a whole bunch of miners who are disgruntled with the options that were available to them and give them what they wanted. So, yeah, this whole notion of decentralization is, I think, really badly misunderstood. And it's part of the message that we've got to get out there and start selling, and start explaining, rather.
All right, cool. That'll be part of the message we hope to put out there then. Okay, Steve, what I want to do is I want to read out some questions that have come to us through the week from people on Twitter. Some people may submit questions here on YouTube as well, but I want to go through the Twitter ones first. Just before we do, I'm going to quickly run through some of the news from the past month, because this is going to be more of a recap than a look forward. And then also, I want you to tell people a little bit about what you do, just in case there are non-BSV people watching this that are curious about who you are and what nChain does.
Sure.
So let me just see. These are the main news points that I came up with. There could be others. If I've missed any, please let me know. We had Bitcoin SV node version 0.2.0 was released on 20th of May. And within days of that, we had the scaling test network stress test. Now that's the one that should excite people, because we saw transaction blocks of I think up to 1.4 gigabytes being processed there.
Yes, that's actually I believe that's a new world record. The largest block that had ever been mined on a testnet that I'm aware of was the gigablock testnet, which was about 1.2 or 1.3. So yeah, that was an exciting moment for us. We weren't planning on going that far, but we got to 1 gigabyte, and things seemed to be humming along. So we thought we'll push ahead, and so the whole point of the stress test was to find the stress point where things started to get a bit tricky.
So if 1.4 gigabytes was the upper limit, and I know the roadmap says you're going to go for 2 gigabytes on the mainnet starting July this year. Is that right?
Okay, no, this one I would like to explain, actually.
Okay. Better clear that up.
It's a number that was in the press release, and people have a tendency to grab onto the big numbers.
They certainly do.
So we are changing the default hard cap to 2 gigabytes. The miners or probably a majority of the miners have already discussed this, and originally we were planning on bringing the hard cap up to 512. The miners themselves will be setting the hard cap to 512 collectively. And what that means is that we won't be mining any blocks larger than 512 unless a new miner comes along using a higher setting. If a new miner does come along and they're not the majority, then that block is going to get orphaned pretty quickly by the other miners. If a new miner comes along and they are the majority, well, that's Nakamoto consensus telling us that, okay, we need to raise our block size beyond 512. So there's also the soft cap, which is the number of transactions that's, sorry, not the number of transactions, the maximum block size that an individual miner will mine into a block. And that one, it can vary between miners without any sort of significant consequence. Now, the reason why we did this is because what we didn't anticipate last November was the impact of big data transactions. So with the raising of the op return limit from 220 bytes to 100,000 bytes, it kind of created a new profile of transaction or of blocks, I suppose. And what we've kind of discovered in the last few months, I mean, it was always obvious to see, but we never had a reason to really think of it, was that what the metric we've always measured Bitcoin in, I think, is block size. But what actually puts a strain on the software at the moment is the transaction count. So it's much easier to produce a big block full of big transactions than it is to produce a big block full of payment transactions, because they're typically only a few hundred bytes each.
Exactly, and I think that's one of the questions we've got in our Twitter list.
Okay. Well, I might be preempting it. So a block for 128 meg payment transactions is about 800,000. I could fill that with big data transactions, and I only need about 1,200. So that means it's a lot less signatures to process, a lot less UTXO lookups, a lot of the expensive parts are easier. And that was the reason why during the stress test, what you saw was a mixture of big data blocks and small payment transactions. So I think that the 1.4 gigabyte block would have been much less of an achievement had it only been big data transactions. But one of those blocks actually was a healthy mixture, and it held about 400 to 350, 400,000. So going forward, we probably need to reconsider how we measure performance and scaling success on Bitcoin. It's a function of both the block size, which is a valid thing to measure, and the transaction count. So I'll be using headline numbers about like block sizes a lot less going forward. Yeah.
So how important is it to scale it so quickly? I mean, I have to confess, I never expected it to go up to above 1 or 2 gigabytes this quickly. So you're not overstretching it, are you?
No, I don't think so. It's important for a couple of reasons. One of which is, the block size halving that's coming up next year. That's going to have an impact on miner revenue, and people point to history and say, well, there's been 2 halvings in the past, and the price doubled before the halvings happened. I'm not willing to pin the economic survival, I guess, of Bitcoin and the Bitcoin mining industry on a statistical sample of 2. Of 2 samples. That's not statistically significant at all. The other reason is because the demand. I mean, we know the demand is coming. There's ramp up time for businesses that want to build a product and get involved in Bitcoin SV, but they start talking to people a long time in advance, and a lot of my time is taken up with those discussions. There's just 1 or 2 of these use cases could make 128 meg blocks a daily thing, and we have to have room for spikes. If blocks are getting full, then the whole dynamic of Bitcoin changes. You need all the complicated fee, highest fee selection code, etc. So the solution to that is just to get our ducks in a row, be able to handle the volume well in advance of when it comes. And there's a real advantage to being able to demonstrate that we can handle the volume, because it gives businesses confidence to invest in building.
One criticism I heard from the social media troll community was that Bitcoin SV was particularly susceptible to this, to the reorg problem, because it does have those larger blocks. Because those larger blocks may not be as easy for miners to find in the right order as their 1 megabyte blocks, 4 megabyte blocks, whatever they are now, and that this was going to cause problems for BSV in the future.
I guess I would argue with the terminology reorg problem. Reorgs aren't actually a problem if you understand them correctly and if your software is architected to handle them. Now, a 6-block reorg is an unusual event, and it should be an unusual event.
Yeah.
And it was a consequence of a few things happening at the same time and possibly at just the wrong time. Had this particular stress test happened in 3 months' time, I think if there was a reorg, it probably would have been a lot shorter. But the thing to remember about this reorg is all of the transactions on the orphan branch ended up in the main chain, and largely at the same time, not at exactly the same time, because part of the issue was actually transitioning data across the Great Firewall.
Right.
But when you understand that reorgs aren't actually a problem, what matters is whether a transaction is in most of the miners' mempools. If miners are respecting the first seen rule, which all the evidence points to the fact that they are, and they probably will continue because they have very good reasons to, then there's almost no difference between a transaction that is in every miner's mempool and they are intending to mine and one that's actually in a block. The only people that actually count confirmations, as far as I know, in the business community are exchanges. And the other thing to factor in is we knew there were problems with block propagation. There's structural issues in the code. We've addressed quite a few of those in 0.20 release, 0.21 release, which we are targeting for mid to late June. We'll address some probably more of them than this release did. So those issues are being worked through slowly. It's not going to be a problem in the future. I'm not concerned about it. And in fact, one of the things I'll be talking about at CoinGeek will be a new technique that we've developed, which is shockingly simple to address this kind of thing going forward to improve block propagation.
Very cool. And actually, speaking of CoinGeek, I know the reason we're doing this live stream a little bit early this month is because the CoinGeek Conference is coming up and you're about to ship off to Toronto. Is that right?
Yes, I'm shipping off ludicrously early in the morning, tomorrow morning. I'm going a couple of days early so I can go visit Niagara Falls and do some other preparatory work for the conference. So.
Very nice. Unfortunately, I can't make it this time, but Toronto was my hometown for a few years, and I like it a lot in summer. I don't like it much in winter.
It'll be my first time there, so I'm looking forward to seeing it.
It's a great place. Okay, let me just run through the rest of the news, just so we cover everything, and then we'll go over to the listener questions. So, yeah, it's amazing. We've gone almost half an hour into a Bitcoin SV live stream, and we haven't said the name Craig Wright yet. That's probably the first time ever.
Must be a new record.
Yeah, so I'm going to mention it now. The next on the news.
I tried to have a conversation with Roger Vera a couple of weeks ago on the condition that we didn't mention Craig Wright.
How far did you get?
He couldn't do it. So.
Right. Well, yeah, it's probably not that difficult or not that easy to avoid Craig Wright this month. Anyway, he's continuing to troll the trolls, as he says on social media, as well as the lawsuits he's got coming up. He also went one step further by registering the U.S. copyright as author of the Bitcoin white paper and version 0.1 of the original Bitcoin code. So yeah, that needless to say, that rustled more than a few jimmies out there in crypto land. And I guess it will continue to. So, what happens there? Does it doesn't really mean anything for other people until someone challenges it? Is that right?
Yeah, it's. I mean, it was always going to be something that was going to ruffle feathers, but to be honest, all the people whose feathers are ruffled should probably be thanking Craig for this. For years and years, we've had people saying that Craig Wright is a fraud for saying that, claiming that he's Satoshi Nakamoto. Definition of a fraud requires an intent to deprive somebody of property through deception, and I don't see anybody making any credible claims that he's intended to do that. So by registering this copyright, Craig's actually he's put himself on the line. If someone wants to challenge him now in court, there's real consequences for him for making that claim. So he's given all of them exactly what they want. So, someone step up, take a crack. I think maybe he wants them to.
Yeah, I'd say that's exactly what he wants them to do. All right, very good. And next news item was the Bitcoin Association Hackathon. We got to taste some of the new BSV services you can enjoy soon. I think they're going to announce the winner in Toronto, right?
Yes, that's right. So the winners being one member of each winning team will be flying to Toronto, and they'll be giving a short presentation on CoinGeek, or the actual CoinGeek day, not the Dev Day. And there will be 4 judges on the panel, and the 5th judge will be the audience.
Are you one of the judges?
Be able to vote for their favorite, yeah. The contestants must be happy because the value of their prize has just doubled in the last week. The hackathon was really, really interesting and exciting event. The number of signups that we got surprised me. It was way more than we thought. The judging process was quite difficult. We had nChain was involved in the first round, and we worked with the judges that everyone's familiar with to come up with the semi-finalist list. And doing it virtually, I guess it creates a few difficulties that you wouldn't have in person. In person, you can just get everyone to come up, bring the laptop they've been working on all day. They can show you, demonstrate it in front of you. It's a bit trickier when it's remote because you get stuff working, etc. But the quality of submissions was just, it stunned us all. It was really hard. I mean, our semi-finalist list was supposed to be 10. We ended up with 14 because we just couldn't narrow it down. But even the ones that didn't make it on the semi-finalist list were still really high quality. And I hope all of these projects continue to build and develop what they came up with, because there's some really great stuff there.
There's a highly entertaining video that the Bitcoin Association put out when they announced the 3 finalists. I recommend people check that out.
Yes. Yeah. So it was fantastic because it brought a whole bunch of developers together as well. We thought we'd have a really hard time manning the kind of the support line for the hackathon, because it was a 48-hour period. We had to get volunteers from nChain to be there so they could help answer questions, etc. But a lot of the load was taken off us because the contestants themselves were helping each other out and sharing a lot of knowledge. So that made our lives a bit easier, but that communications channel is still going, and the contestants are still talking to each other and helping each other out. And the whole goal of the hackathon is to nurture the developer community around Bitcoin and help it to grow. And I think it's achieved that hands down.
All right. Well, good luck with that then. I'll just give a shout out to the 3 finalists. First finalist was Polyglot, which is from New Zealand, I think. They're a Python-based MetaNet interface for developers. The other one was Tonic Power. They're a Canadian team. They're an advertising and crowdfunding platform based on BSV for content creators. The third one was Uptime SV, which is an Australian team, and they do service performance and uptime monitoring to test your system robustness. So all of those are just budding projects. Check them out. It's tonicpower.com, uptimesv.com. But let's wait and see who wins the hackathon first. I'm sure they're all worthy projects in their own right, but
I don't want to make any comments on individual contestants.
Of course not. Yeah.
Dusted,
Other than to say that they're all fine projects and they'll all go a long way.
Yeah, although the southern hemisphere does appear to be punching above its weight. Having said that's not a comment on the Canadian team at all. I think their entry is fantastic as well.
There's a lot of Australians in Bitcoin SV, I've noticed.
Yeah, it does seem to be a bit of a hub. My hometown of Brisbane, in particular, is home to quite a lot of Bitcoin SV supporters. Brendan Lee, who's seems to be quite well known around the traps, was someone I came across in Telegram channels talking about opcodes, and discovered that he lived a few blocks away from me.
Right.
At the time. So yeah, Craig spent quite some time there as well.
Yeah, actually, I'm not sure where Craig's from originally. Is he a Queenslander too?
He lived around Queensland, yes,
Right.
but yeah, moved around quite a lot. So yeah.
Excellent. All right, just wrapping up the last couple of news items before we go to the listener questions or viewer questions. We had Robinhood, the banking and investment app, today. Apparently, that's really popular with millennials. I'm not a millennial, so I've never used it, and I think it's not operational in my country. So it's they just scored themselves a New York bit license, and so they'll be supporting BSV as one of only 7 cryptocurrencies that where they're supporting. So that's kind of a coup, because that's a pretty popular app.
Yeah, I actually wasn't familiar with it at first, but until I saw that story, and ironically, the last couple of days I've seen quite a few tweets from prominent players in the crypto sphere moaning about the bit license. I don't know the detail of the bit license. I do understand it's got quite some onerous requirements, but it really just created a market opportunity for somebody. Everyone else was scared off this market, which meant there's an entire market there for the taking for somebody to, the whole of New York, for someone who actually was willing to go through the process and comply with regulations. So good on them. They've got a monopoly there for a while. Enjoy
Sounds
that
like
until another competitor comes in.
Yeah, and probably the one of the biggest companies supporting BSV at this stage in that part of the world. So others have either pulled out of New York altogether, or they're still going through the process, because you basically have to have bank tier funding to even apply for a bit license.
Well, I hope we have a lot more people buying pizza with BSV in New York now.
Chances are. Okay, speaking of regulation, we also, just going back to the start of May, we had FinCEN, the Financial Crimes Enforcement Network in the US, release guidelines for money transmitters and CVCs. That's virtual currencies, in case you didn't know. And they're basically saying, yes, you are a money transmitter business, and yes, we will regulate you if you hold funds. Now, there's certain exemptions for software makers and non-custodial wallets, which is kind of good news. But ATMs, crypto ATMs, definitely didn't escape FinCEN's gaze. And I guess that's going to have fairly wide implications for the crypto community. I know here in Japan, as soon as the regulations came out, all of the ATMs disappeared. Before that, it was kind of a free-for-all. You could find them in many places, but they all shut down pretty quickly, and I haven't seen many at all lately.
Yeah.
So
yeah, I guess what are the implications of that? It does definitely slow down accessibility, but what's the upside of that? I'm not one that really plays pokey machines. I stuck $1 in one and won $100 on the first press of the button, and decided that's all the good luck I'm going to have in my gambling career. So I quit gambling forever after my first go.
Probably a smart
but I would certainly feel a lot more comfortable sticking my money in a regulated slot machine than in an unregulated one, because I mean, there's nothing stopping the operator of a slot machine from modifying their software to claim that they're paying out 95% while they're only actually paying out 40 or something like that. And there's plenty of potential issues around the use of ATMs. You can stick your money in and not get anything out. What if there's no support line to help you out? the market and reputation can take care of that to some degree. But I mean, at the end of the day, this is a world where money handling is regulated. Trying to get around it by, I don't know, sticking an ATM in a shopping center and hoping nobody notices will get you so far for a short period of time. But it's not a long-term solution. Like, it's going to get cracked down on sooner or later. So just do the work, get the license. Then you've got a sustainable business model that's not going to come crashing down around your head unexpectedly at some unknown point in time in the future.
Yeah, it's just a reminder from FinCEN. They even said there are no new laws or regulations in these guidelines. They're just to remind you, a reminder that even blockchain services, payment cards, gift cards, that kind of thing, you are all subject to the same regulation as money. Even if you don't look like money, you're still going to be regulated. And I think we have to be realistic here. It was always going to happen.
Yeah. And I mean, to be honest, I actually think they're taking quite a soft approach. They could just come in and start waving the big stick around. They're giving people plenty of fair warning. The market went Wild West for quite some time. I mean, we're 10 years in. And they're just sort of giving people a gentle reminder. So everybody's got plenty of warning, plenty of opportunity to operate within the regulatory frameworks and get their licenses sorted out, etc. They didn't have to do that.
Yeah. To me, it's just always been inevitable, just something we could expect. All right, and last news item. I left this one till last. In a bizarre twist of fate, exchange Binance delisted itself from the internet for 7 days. They shut off all deposits and withdrawals after losing 7,000 Bitcoin, I think worth about $42 million at the time, from some of its customers' wallets. We don't actually know whose wallets they were yet, but they do say they're going to reimburse everyone. But yeah, that took a few people by surprise, and there was a fair amount of Schadenfreude coming from the BSV community. 7,000 BTC, that is, Bitcoin SV not affected.
Yeah. I guess we're all lucky. None of us had our BSV on that exchange at the time. I don't have a whole lot to say about Binance. I'm just gonna let them do what they do, and what happens as a result will happen.
Yeah. Yep. Exchanges will be exchanges. So, okie dokie. Now let's just go on to the submitted questions we have here from Twitter. So, all right, now I forgot to do this before, and we are more than halfway through. So, Steve, you are a lead developer at nChain. Could you just explain briefly what you do?
Okay, I'm actually not lead developer. That's Daniel Connolly. I'm the director of engineering. And in the Bitcoin SV project, I have a different title, which is technical director, and Daniel is lead developer. So,
okay. In that case, I apologize for this mistake I've made on the title card there.
No, that's no problem.
The Twitter address and URL are correct.
If you go through all of my past interviews, I'd take everything at face value. I've probably got about 14 or 15 titles. So anyway, so what I do, all right, it lasts not as much coding as I would like to. In fact, almost none these days. Our engineering department is made up of several teams that all work on quite a few different projects. And obviously, Bitcoin SV is one of the more well-known of those, as is a Nakasendo SDK. But I guess part of my role over the last year, it's changed a little bit. nChain was kind of quite focused on building support services, I guess, for Bitcoin before Bitcoin SV came into existence. After the events of November last year, there was a whole ecosystem that, you know, we took some damage. We lost a few products. We lost, you know, quite a few developers to other blockchains. And so there was, you know, a whole kind of ecosystem that needed to reform into a cohesive whole. Lots of the components were there. There were a few that were missing as well. So I guess I've turned my sights towards the bigger picture, towards identifying what the ecosystem as a whole needs. Where are the gaps? What can we at nChain do to help fill those gaps, so that the ecosystem can form and strengthen? One of those things, you know, I guess I'll give you some examples. You know, block explorers are a critical component of any blockchain. Now, we ourselves, by no means, are the only ones. In fact, 2 or 3 block explorers appeared out of nowhere within the first couple of days of Bitcoin SV's existence, and these were freshly built, freshly coded from scratch. We have a block explorer project as well ourselves. Stuff like the Miner ID project, which I'll talk about, I'll give an update on, I guess, at CoinGeek. The merchant API, which I mentioned, I talked about at CoinGeek November last year, and again, update coming. The wallet workshop that the Bitcoin Association organized, I was heavily involved in that, to help not only change the way that wallets interact with the Bitcoin network and with the customers, where merchants and customers interact, but do it in a cohesive way across the whole ecosystem. So these are the kind of things that I think about all the time, and my day-to-day life, a lot of it is, you know, organizing this kind of stuff. It's very helpful to have my technical background, because I can look at proposals and review technical ideas, you know, very quickly and efficiently. And occasionally I get to sit down and get creative and kind of invent new protocols and things myself. Yeah. So
get creative and invent new protocols.
Yeah.
All in a day's work.
Yeah. So there's a lot of different sides to, you know, what I have to do day to day, but and I've really had to learn how to be a little bit more hands off, because the trade-off you make is the less of the detail that you handle yourself, which is what I really like doing. I love getting into the weeds. But the more that you step back, the more that you can kind of influence and guide things in a kind of a cohesive way. So that's been my personal struggle this year, is grieving for the loss of my beloved coding time. But
yeah, it's kind of meditative, also, I've heard.
But working, it on the other hand, has given me the opportunity, I think, to make a much more constructive contribution to the growth of Bitcoin.
Excellent. Yeah. All right, we'll go on to the submitted questions here. Just before I do, I want to thank some of the people who were involved with the MetanetTV Livestream before we came along and did this. These are the people you should listen to, and these are the people you should follow on Twitter if you want to find out a lot more about Bitcoin SV, the Metanet, the community, what's being developed, everything there. People can see that up on screen. And please do follow them. All right, coming back. Now, we've ascertained that you are definitely not revealing the name or location of your secret cubby house in this live stream. So I'm not touching that one. I don't even know what that means.
I'm not sure I do. That's I'm certainly not signing any statements with private keys about where it is. So.
It's good move. Stay clear of that kind of stuff.
Sue me and you can find out in the court discovery.
People can challenge you on that one. All right. The first question is from Yobits on Twitter. The first question is, when is Fork IAD going to be removed? And when will 2016 DA be put back?
Both questions that are complicated. 2016 DA, to be honest, I haven't really put a lot of thought into that one. I think it does need to come back in time, but it's probably one of the least urgent. I guess I've characterized the upgrade that we're planning for February next year as the Genesis upgrade, as the return to Genesis, and I said almost a complete return to the original protocol. I don't think that will be the last protocol change, the last hard fork to get it back to the original. There'll be a few little bits and pieces, and that one's not a little bit or a little piece, but it's probably not going to be in the February update. Fork ID. Fork ID is actually a bit. It's a bit in a particular data field in a transaction, well, in a signature, actually, which signifies that a different sig hash algorithm is being used. And this different sig hash algorithm was implemented when Bitcoin Cash was born, or rather when SegWit coin was born, as it split from Bitcoin Cash. And it served a dual purpose. One was because it basically made signatures on Bitcoin Cash invalid on Bitcoin. It formed a hard two-way replay protection. The other purpose was that it fixed a well-known bug in, well, yeah, I think bug is probably the attack vector, I think is probably the right word, called quadratic hashing problem, where you could quite easily construct the transaction in such a way as the validation time increased exponentially with the size of the transaction. Now, I'm sure this one will turn into a Reddit thread or something, but
hopefully.
The simple fact is that Satoshi was not opposed to fixing bugs or attack vectors. He modified up return as soon as he realized that there was a significant bug in that. He made other changes early on when he realized that there were significant bugs. So this notion of returning to the original protocol, some rather silly people have suggested that means we have to put it back exactly at 0.1, including all of the bugs and attack vectors. Now, I'm pretty sure that Satoshi had some common sense, as demonstrated by the fact that he fixed some of these bugs. So I think we'll look at that sig hash algorithm. We'll work out, is there a way that we need to investigate it very, very closely. Is there a way to make it, kind of closer to the original intent? Is any of the original intent lost in the modified version? I think a little bit of it is. There's some data fields I think that might be covered now in the sig hash that weren't before. What we do intend to do for next February, though, is make it retrospectively possible to use the original sig hash algorithm. And the reason for that is because the way that Bitcoin was originally described, it was very clear that offline transactions were a part of it. It's why we have a field called nlock time. Nlock time basically makes a transaction invalid until a certain time has passed. And we don't expect miners to sit there and keep that transaction in memory for a year or 5 years or 10 years. We expect that someone's going to have this offline transaction and store it on a USB in a safe or something like that. And when the time comes, they'll broadcast it. Gotcha. So it's very feasible there are transactions out there which were once valid, which are now not valid on Bitcoin Cash or on Bitcoin SV. So we can make those transactions valid again by just applying a simple rule. If the UTXOs that they're spending already existed, if they already exist today, then we can make an exception and go, okay, we'll let you use the original sig hash algorithm. That means all those offline transactions are now spendable. If the UTXOs don't exist today, if they're new ones that were created after today, then obviously that's kind of a different story. our intent here is to respect the rule that we should never ever make a spendable transaction unspendable, and vice versa. We probably shouldn't make unspendable ones spendable. So that's kind of how we intend to address that.
That makes a lot of sense to me, because if you want people to use it for wills and trusts and things like that, they need to know that it's still going to be around 20 years' time and it's still going to work.
Yeah, exactly. But just briefly back to the question of the Fork ID. That's probably still an open question. We've been so focused on scaling this year. There's a few things that really do need very detailed in-depth study, and that's one of them. I'm not going to risk making a mistake by rushing the analysis or rushing the planned solution. So we'll get to that when we get to it, when we've got time to address it properly.
Alrighty. And just going on to the next question here is Sino Trinity from Twitter. They said, what improvements are you bringing to Zeroconfirmation when Craig Wright claims it's already practically safe and offers a big bounty or bug bounty on anyone who pulls it off?
I noticed no one's tried to claim it yet. Look, I agree with him. It is already quite safe. The only the only double spends that we see commonly are ones where someone sort of deliberately orchestrated the situation and exploited certain oddities in transaction acceptance rules. Zeroconf, I think you just need to lay down one or two caveats. Right? Zeroconf transactions are, I think, I don't know if I would call them a premium service, but they're not a discount service. So if you're paying the transaction fee that the majority of miners are accepting, then you should have a reasonable expectation that Zeroconf is safe. And most of these demonstrated double spenders have actually exploited the fact that miners will reject transactions that don't pay an appropriate fee. Now, what they do is they send out free transactions first, or very low fee transactions, and some miners will accept them and some won't. So now you've got these two different sets of miners, and then they send a second lot of transactions out that do pay the fee, and the ones that have already got the double spend of this new one will reject it, and the others won't. So that's kind of how you get around how you do that, how you get these competing transactions into the mempools. And the solution to that really is quite simple. It's firstly send transactions out that meet the fees of all of the miners, and the merchant API that we're developing at the moment addresses that by giving you an easy way to find out what the miners are all charging. The second is for the miners themselves not to forget about transactions that they aren't planning on mining, but to put them in a separate bucket. Miners may not actually want to just make a binary choice about a transaction. If they charge 1 Satoshi per byte and someone sends them one that's only half a Satoshi per byte, maybe they will mine the transaction, but not straight away. They'll create a differential in service levels. They'll go, okay, well, I'll mine this transaction because it pays the full fee. This one only pays half the fee. I'm going to stick that in a bucket for 12 hours, and if no one else has mined it by then I'll mine it. Who knows how they'll structure it, but these are all possibilities. So yeah, Zeroconf is safe if you do it properly right now. The transactions aren't propagating across the network as fast as they could be, so we can make some improvements there. We can make it easier for people to understand what the parameters of a Zeroconf safe transaction are. But to date, it's not happening. I've yet to see anybody complain that they've had a transaction double spent. So
I had another security question for you here in a similar vein, and I'm kind of interested in this one too. It says, how do we secure the SV chain against adversary miners, especially irrational ones, given BSV's current small hash rate versus other SHA-256 chains?
We make it cost them a lot of money to perform an attack, but it's probably important to understand what does an attack actually mean? What does it look like?
Mm-hmm.
Reorging the chain, that's not an issue unless someone's planning on doing big double spends. And remember, the only person that can really do the double spends is the miner themselves or someone that they're colluding with.
Yeah. I think he
If
might have
someone
been.
mines a long chain in secret, 100 blocks, something like that. 100 blocks would be what, over 1,000 BTC in block rewards.
Right.
Firstly, they're taking a really big risk that they might lose all of that because they may not actually end up catching up. They've got to remember there's a whole bunch of hash rate out there that is supportive of BSV that is not mining BSV at the moment because it's uneconomical to do so. More economical to go and mine BTC and then convert them on exchanges to BSV. But the minute an attack starts, if it does, there's a ton of hash rate that will come back. So you can't look at the current hash rate and say that's what it's going to, that's what I need to overwhelm in order to perform an attack. There's a lot more out there. It's going to be a lot more expensive than people might be assuming. So if you're willing to do that, spend that sort of money out of pure malice, well, I don't know. I mean, I know a lot of miners. I don't know that that's what motivates too many of them. So you need to be motivated by, well, I can make more money by doing it.
Friendly miners maybe,
do that.
You might get miners who are mining other chains and highly supportive of other chains decide to do it, just to mess with BSV. I mean, obviously the other chains have the same problem, but BSV maybe because it's a newer project. In
my experience, miners will move or take significant action for a 0.5% difference in revenues.
Mm-hmm.
The cost involved in something like this is astronomical in comparison. So I find it fairly non-credible that they do it. I mean, and if they do, there's options. I mean, miners express their acceptance of a block by mining on top of it. That's a quote from the Bitcoin white paper. If there's an obviously malicious branch, then it's up to miners. They can decide to ignore it. Sooner or later, that branch becomes shorter and it becomes invalid. Whether they would choose to do that or not, I don't know. That's the prerogative of miners. But the simple fact that it's possible should be a warning to anybody who wants to try and engage in this sort of malarkey. So yeah, I'm really not that concerned about it. I know that we have a ton of hash power support that can come in at a moment's notice if needed.
That's interesting.
Chain. So,
Where's all that hash power that can come in at a moment's notice?
It's in my cubby house. I can't tell you.
All right, well, we'll leave that one there. Hey, I just noticed we've been going for about an hour, and I only asked you to stay here for an hour. We do still have a few submitted questions here. But I also understand that you're
I'm happy
busy.
To continue. The reason I didn't suggest that we push it back to the actual time was because I had a meeting following that one, so I wouldn't have been able to go over time. But okay. Yeah, no, I've got at least an hour spare, so I don't know if we want to bore everybody for an entire another hour.
We won't go another hour, but if we could go another 10 minutes or so, that'd be great.
Sure.
But yeah, I also don't want to mess with your schedule, so if you gotta go, just let us know and we'll roll them over, maybe answer them on Twitter or something. We did answer some of these questions in our initial discussion there, so we can probably go over them. One Ken Sato says, what's going to be the limit of op return after the June fork?
We haven't actually changed the default. We haven't actually changed the limit itself. Right. What we have done though is we've moved the 100 kilobyte limit and has made the 100 kilobytes a default. So at the moment, you kind of have these two different peer-to-peer networks overlaid on top of each other. You can connect to any Bitcoin SV instance and fire a regular payment transaction at them, or one with op return that's less than 200 bytes, 223 bytes, and it'll spread out over the whole network. There's a limited subset of those nodes that actually accept these and relay these 100 kilobyte op returns. So you've got to find one of those, and they've got to be connected to the rest somehow in order to submit them. Once we make this change, because we also happen to be changing during a hard fork upgrade, and all of the nodes need to upgrade, then it'll be a lot easier for people to transmit 100 kilobyte op return transactions. We'll definitely raise that again, but again, it's a question for the miners. I would like them to take lead and increase the limits themselves and decide where they want them to be. And then, you know, the network shows demand for it, then we as developers will follow and go, okay, well, we'll move the defaults to what the network appears to be using. One change that will be apparent, I'm not sure if it made it into 0.2.0 or if it will be in the June release, is that we've created the ability for miners to now price the transaction, the payment part of the transaction and the data part of the transaction separately. And the default for those are still the same as the original default. So in effect, it's currently identical, but miners need to start having a think about how the use of data transactions affects their business model. They might want to make data cheaper, or they might want to make it more expensive.
Gotcha, yeah.
That's a question for them. And it really actually does raise an interesting point, which goes back to the 1.4 gigabyte block. The most significant part of that 1.4 gigabyte block, in my opinion, is the transaction fees in that block.
Yes, that was actually another question, so go ahead with that.
Oh, okay. I think that particular block was 28 BSV was the transaction fee component, plus an additional 12.5 as the block reward. The transaction fees are probably overpaid by about double. Cheapest, if we'd used the cheapest possible transactions, and they would have been probably 14, but still in excess of the block reward. We're moving into a time where the dynamics of mining is going to shift and change quite significantly, because transaction fees have a different time dynamic to block fees. Block fees, doesn't matter if you find a block in 5 seconds or 10 minutes, you get the same reward. The transaction fees, you have this slow ramp up of block reward. A block found after 1 minute only has about 1/10 of the transaction fees as the one that you find in 10 minutes. So you might find some really interesting dynamics going on there. And this is really the point where Bitcoin starts to be Bitcoin. The Bitcoin that Satoshi intended, which was driven by transaction fees. And this, I think, is the point where miners are going to be a whole lot less, going to become a whole lot more interested in these kind of dynamics and pricing transactions and how they can compete with each other. It has another really interesting side effect as well, in that it decouples hash rate from price. At the moment, we have a situation where the block rewards are all fixed on all of the competing chains, BTC, BCH, BSV, and the hash rate ends up being distributed in approximately the same proportion as the price.
My theory was that because it was on a testnet, people were a little more willing to spend their testnet Bitcoins than they were on a mainnet.
Oh, that certainly makes it easier. Yeah, but the minimum fee, according to the 1 Satoshi per byte, had all the transactions been minimum fee, then it would have been about 14 Bitcoin.
Right. Okay.
In transaction fees, yeah. But if you've got a situation where BSV might have a lower price, but the total reward for the miner is double, then we'll end up with double the amount of hash rate that we would otherwise have. So what it means now is that the security of the chain becomes proportional to use, not proportional to price.
Okay. All right. That question was from Nicholas Mainville on Twitter, by the way. Just want to make sure everyone gets the right shout out. In a similar vein, there was Mola Ram on Twitter. I really don't want to upset someone called Mola Ram. I've seen Indiana Jones, and he asked, have you actually had any discussions with miners about increasing the upper turn limit? You said you wanted to hear it from the miners, but have you actually spoken to any of them yet, or is that just something you'd like to do?
I talk with miners on a fairly regular basis, and I have mentioned to them that there's probably an appetite out there for it. I think my feeling is that I've got so many other competing priorities, and the current limit appears to be it doesn't appear to be preventing anyone from being able to do anything that they really want to do. One of the very first things that was developed on top of op return in terms of protocols was mechanisms for splitting files amongst many transactions. So if we raise the limit to 200 kilobytes or a megabyte or 5 megabytes or whatever, there's still going to be files that are bigger than that that people will want to put into the blockchain. So these splitting tools kind of solve that problem. I think what people maybe the underlying sentiment behind the question is people just want the limits to be raised. The answer to that question, I think, is lobby the miners for it. There's a couple of changes that I'd like to put in place to make it easier to handle big data. Right now, I mean, I don't think, push data allows for like 4 gigabytes. I don't know that the databases that we're keeping UTXOs and other parts of the Bitcoin data store, even the block files, etc., are the most efficient the storing this data. So one thing that we have been talking about internally is kind of a meta opcode. And before everyone freaks out, and I'm not inventing new opcodes. This is just a kind of a marker in the on-disk representation of a transaction or a script that says this is a big data chunk. Here's the first bit and the last bit because there might be useful metadata in there for you. And here's where the rest of it is. It may not even be on this machine. It might be somewhere else. It might be out in Amazon S3. So
it's so decentralized.
Hey?
That's so decentralized.
I honestly, I foresee a day where there may not be a single place where the whole blockchain resides. There might be different logical portions of it would still be multiple places.
That's interesting too.
Distributed, but not necessarily all controlled by the same entities. That's probably a fair way into the future.
Yeah. Well, let's keep talking every month, and eventually we'll get there. So I have 2 more questions. You okay with 2 more questions?
Yeah, sure.
All right. I got one here from Dale Dickens who is at Mad in Melbourne on Twitter, and I really wanted to make sure she got this question in because I think it's quite an interesting one. She said, if you're not able to say who is patiently waiting for Bitcoin's performance to be proven, can you give us an idea of how many businesses are ready to go ahead with integrating Bitcoin? We kind of touched on that earlier, but I think she's asking more specifically, how many do you know that are ready to come on board?
It's hard to come up with a number off the top of my head because I have to sit there and mentally count through them all. In terms of ones that I think have got the potential to drive significant volume, and by significant, I'm talking, at least 100 meg a day of transaction volume. I would say somewhere in the order of 10 to 15. Probably I'd bump that number up to 25, 30 if I include ones that haven't actually started building yet, that are in the sort of preliminary phases. They tend to go through this cycle of, oh, this looks interesting, I need more info. So myself or other people from nChain go and talk to them and find out what their questions are, find out how they need to use Bitcoin, and then we sit down and ask ourselves, okay, well, can it do what they need to do, or does it need something else? And then we go back to them, and we kind of have these discussions. And to be honest, we do make some prioritization decisions based upon some of this stuff. We have one potential user who hasn't made a final business decision yet, but this particular user has the potential for making transactions that are in the order of 100 megabytes of data per transaction, and many of these per day. And I had stopped and had to think about it, and I went, I'm not sure how well Node's going to handle this today. There's a couple of pretty minor changes, or there's somewhat structural changes, but not a huge deal that we could make. And to me, that's kind of a no-brainer. Like if this is a definite go, then I think we'll make those changes, because that will bring in significant revenue, security, use, not to mention making people notice.
Sure would.
So I'm happy to have some of our development roadmap decisions guided by potential use out there. So I'm not sure if that's a very specific answer to Dale's question, but it's enough that we're taking serious notice. 6-12 months, definitely within 6, you'll be seeing some of this stuff live on the chain. Tokenized is going to be a huge one. I did actually, those numbers I gave you before probably exclude anybody that wants to do something on tokenized. There's a whole ton of people who are like, how do we do this? How do we bring our token over? How do we make our new token?
Please,
a lot of them,
not another ICO rush.
Already. So yeah, the tokenized rush. Yeah, that's probably a thing that's going to happen.
That's something to look forward to. I say that with a hint of sarcasm there, but yeah, definitely something people should be building on for all the right reasons.
We're currently in nChain. I'm actually trying to make sure that we're tooled up to deal with it. I mean, I do think it's going to be a significant resource drain on us, as well as on tokenized. And I mean, that's a fantastic problem to have. But I've been thinking over the last couple of months, because there's lead time to building up developer and support and consulting capability. So I'm anticipating that need, and we're working on building that right now.
Absolutely. Alrighty, now one more question I'm going to bug you with, and then we'll plug CoinGeek, and I'll let you go. The last one's by Beats by Kashi. It's a bit of an existential question, so I thought I'd leave that one to last. It says, a lot of roadmap questions here, but I'd like to ask you on a personal note, in your Bitcoin journey, what would you say was your biggest blind spot in understanding how the system works, and what changed that? And what topics are you studying today to understand better? But yeah, do you have a big blind spot, or has it all happened pretty much as you expected?
No, I think it's definitely fair to say I had a blind spot. I've had quite a few. My very first post on Bitcoin Talk was me advocating for changing the block interval to 1 minute. So I mean, I'm sure I'm not the only one that's gone through that particular journey.
Someone called Charlie Lee was reading that day, and he thought,
Another one was that once upon a time I thought I realized once upon a time, it's not that long ago, I realized that there was still a little bit of the small blocker in me, that I had to purge.
There's
I
a
was having
scoop.
a chat with one of our architects about Terranode,
Oh.
and he said, talking about ideas for how we would handle the UTXO, and he said, well, Bitcoin is not a chain; it's actually a graph, and in order to be able to switch from one point in that graph to the other, we should be keeping a copy of the UTXO for every block. And my head nearly exploded. I mean, the UTXO is quite small now. It's 2 gigabytes. In a terabyte block world, I would expect it to be terabytes. And I looked at him and said, are you serious? You want to make, multiple new terabytes for every single block? And he was like, yeah. And I went away and scratched my head and went, okay, well, I did actually begin this conversation by saying, let's assume unbounded resources. There are no constraints on the resources.
I think once you put that disclaimer on it.
That's what he did. And then when we talked about it a bit further, I went, okay, well, we probably don't need the whole, every single block for all of history, maybe the last 1,000 or something, because if we need one in the middle, we can rebuild them. And then we can probably delete 99 of each 100 and keep, checkpoints, because if we really checkpoints, I shouldn't use that word, it's a trigger word. One full copy every 100 blocks, because if we really need to find one in between those two, then we can start at one of the full ones and then rebuild forwards and get the one that we need. Those situations be so rare that we can live with the cost there. Yeah. But the biggest blind spot, I think, for me was, and this is really a recent one, it's all to do with the whole Zeroconf thing and the fact that once you have a transaction in the mempool of all of the miners, it's almost as good as it being in a block. I had this big mental block that there was, some huge conceptual difference between the boundary and time between the end of the last block and everything that's happened since then. And I'm now starting to think of the mempool is actually what I call an ephemeral block. It's a potential block. The potential block that I have compared to the one that the miner next to me is almost identical. The variations are largely in slight differences in order of the transactions. And maybe one or two transactions at the end that had made it to them but not quite made it to me yet. But we're talking a difference of seconds.
Yeah. I think in about 7 years, I've only ever had one transaction returned to me that never went through at all. That's on BTC. Yeah. I wouldn't call myself a heavy user or anything like that, but I think in that time, it's not bad.
And I came to this this way of thinking about it actually when we were working through designs and stuff for Terranode. In fact, it was almost a part of this same conversation about the graph of UTXOs. We started talking about, well, let's actually start pre-building the UTXOs. We don't need to wait for a block to come in. We know what we're building. And this is one of the nifty consequences of not going down the road of CTOR. If we're just appending transactions to blocks, which I'll talk about in more detail at CoinGeek, then I don't need to actually finish the block before I can start building the UTXO set that will apply to the next block. I can do it progressively as I'm building the block. And that sort of revelation made me realize that the Bitcoin, it has this element of 10 minutes by 10 minutes of these, block chunks. But that last kind of ephemeral block is actually just being progressively built over time, and it's almost as valid as previous blocks. And that's the thing about Bitcoin, is it's a record of history, and the history becomes more and more immutable as time passes. the mempool is the most mutable version of it, but block 1 is still a little bit mutable, but it can be orphaned, as is block 2 at block 100. Just that the chance of that happening is many orders of magnitude smaller.
Alrighty, that's probably a good point to wrap up on. And you mentioned that you're going to be talking about that at CoinGeek next week. Is that going to be live streamed, or are we going to be able to see the presentations afterward?
It will be, yes, it will be live streamed.
Oh, that's
yes.
good to know. All right, and yeah, when are you speaking at CoinGeek?
So I'm actually hosting the developer day, so I'll be the annoying twat in between everybody else. I'm doing a presentation actually first up on Dev Day with Daniel Connolly. We're going to do that one together. And I'll also be doing another presentation on the morning of CoinGeek. I think I'm second. I think I'm straight after Jimmy. So.
Okay, and I think that starts on the 29th of May, is that correct? Or is it the 30th?
Yeah.
I didn't want to get the dates wrong, like I get daylight savings wrong.
Yeah, the 29th is Developers Day, and the 30th is the CoinGeek Conference, yeah.
Okay, and how many days does the conference run?
It's just those 2.
Okay, sure.
Well, I understand quite a few people are going to be there in the days before and the days after. So
yeah, it's definitely the event to be seen at in the BSV community. I don't want to talk it up too much because I'm not going, and I'm going to just make myself really sad about that. But yeah, go and check out CoinGeek.com if you want more information about the conference. And I do urge you to attend, even though I can't be. And yeah, you can see Steve Shadders live. All right, so people who don't already follow you on Twitter, I'm sure there could be a few, probably not, but you are at Shadders333 on Twitter.
Yes, the 333 is because there's some other bastard called Shadders somewhere out there on the internet. Got there first.
How did he get there before you? I just want to say Shadders is one of the best Aussie names I've heard in a long time. I thought it was a nickname at first. Is that is actually your surname?
The answer to that question is in my cubby house.
Right. That's good to know. I'm just putting the title card up there again. It does have the wrong title on it, but that is Steve's Twitter account, and that's the URL for nChain.com, so you can stay up with all the latest developments there yourself. Alrighty. Well, thanks a lot, Steve. Thanks for your patience, and thank you for staying around about half an hour longer than we intended.
That's right. It's been a pleasure.
All right. Thanks a lot. I'll see you later.
Okay. Bye-bye.
Okay, that was the MetanetTV Livestream. Thank you all for joining in. Yes, definitely follow those links. Me again. If you want to hear more live streams, watch more videos, go and follow Bitcoin SV Train. That's me, John, on Twitter, and you'll hear everything I have to say that day. And I'll also bring you the latest updates if you subscribe to this channel. That's probably just as good of an idea. Now, if you want news, yes, do follow nChain.com. Another good news source is the BitcoinAssociation.net. Always, they have a weekly update there with all of the things you need to know about the latest in Bitcoin SV. Of course, CoinGeek.com, which is definitely the major news source for Bitcoin SV. Okay. Thank you all for joining me. This has been John, the Bitcoin SV Train, and we'll be doing this at the end of every month with people from nChain, whether it's Steve or Craig or whoever else happens to be around and wanting to talk to us. So thank you all for listening. Thanks everyone who submitted questions, and I'll see you again very soon. Bye-bye.